Hey, welcome to our weekly live show. Um, and thanks for joining us. If you're joining us live, don't forget to hit that like button, do all that fun stuff. So you will be notified as we have more and more things that come out, right? We're going to be doing lots of good videos. I feel like I know they're good videos, right? Aren't they good videos?
Yeah.
Looks like we have 5 people already here. That's awesome. So, or 3, somewhere in there. Uh, so totally, uh, again, like that. Hit the subscribe, all that fun stuff. So, Amanda, we had we're in this Facebook group. We're part of Profit First, and they had this question that we've solved, at least partially solved, and all of these people were asking this big question, and I figured, hey, let's do a video about it. So that's
Yeah.
what we're gonna do.
Yeah. So Profit First is really amazing. We love it. If you're not familiar with Profit First, we highly recommend it. It's a concept developed by Mike Michalowicz. And the basic idea of it is that your revenue minus your profit equals your expenses. Whereas normal general accounting principles tell you revenue minus expenses equals profit. And people take their profit last. Mike, as an awesome revolutionary, put profit first, and you take your profit first from the business and you figure out how to run it with everything else. Now, when I first heard about Profit First, I heard Mike on a podcast say that basically, and I was like, okay, we can do this. And I went and did it. And
Yep.
it wasn't
Well,
until,
and what we were doing was pretty much what almost I hear a lot of entrepreneurs do. Last to get paid. Hopefully, we are hoping we'll get paid. And then, your customers say, yeah, but you love what you do. So therefore, it's okay that you don't get paid. I mean, I've heard
Mhm.
that multiple times.
Yeah.
That
So we switched our mindset. It was really great to pay ourselves first at the beginning of the month, figure out how to run the business with what was left from that. And I thought that was profit first. And it wasn't until a couple years later that Brandon got the book for free by listening to a podcast of Mike's and wrapped it up and put it under the Christmas tree for me. I devoured it. And January 1st, we were full tilt profit first with the full system. If you're not familiar, there are multiple different bank accounts. There's certain percentages that you put in the different bank accounts, and it's really a great way to manage the cash flow within your business.
it was
Totally
probably one of
revolutionary.
the best gifts I
Christmas
gave
presents
you.
ever. Yeah.
And it didn't cost me anything. It didn't even affect my budget.
Right? You just had to leave a review on their podcast and send an email or whatever. Yep.
Yep.
But there is one big problem with Profit First that we've been hearing over and over again. So we wanted to pull back the curtain, reveal what that is, and share how we have solved it, what it looked like for us. And should I go ahead and share what that problem is?
Well, maybe add a little more to the problem. So, as we are, one, you want to do profit first, right? And some people are like, oh, you got to have all of these bank accounts, right? So, we create all these bank accounts. One's for OPEX, one's for taxes, one's for owner's pay, and profit, and a few other things that we do as well. But what happens is we will build those things, and some people are already like, I have to keep track of 5 bank accounts. That's crazy. But what Mike says is, instead of having one giant plate, make smaller plates, right? So we make
Right.
smaller plates to be able to feel like, one, we are not um, just going to start spending money and saying, hey, we got all this money. We made a great month. Let's go double spend our money. That's what
Yeah.
happens a lot.
Yeah.
People,
Yeah.
people forget that they need to still pay bills or
Yeah.
themselves.
Yeah, so what you're saying, Brandon, is that the different bank accounts, that's not the problem. That's actually really smart. And one thing we love about Profit
Yeah.
First,
Yeah.
it helps bring a lot of clarity. And that is actually pretty simple to do. If you are having a hard time opening up the bank accounts, reach out to Profit First professional and ask them. There's so many cool ways to make sure that you're able to get those bank accounts open and not have to pay
Yeah.
multiple fees and how you manage it and all those things. It's definitely not a problem. Did you want to say
Yeah.
anything
But
else?
people tend to think that's the problem. It's too confusing. But in reality, by having those pieces in place, it makes your future problems not a problem.
Absolutely. And then other people say that the problem with Profit First is that your OpEx is limited, your operating expenses are limited. But we think that's actually like a healthy way to run a business. You don't want to spend
Mhm.
everything on running your business. You do need to set aside something to pay taxes. You do need to actually pay yourself, make yourself a priority. There's nothing wrong with that, right? So, and
Yeah.
actually, we've even seen whenever we limit our operating expenses, we make better choices for how to grow our business. And it's not stifling our growth, it's actually helping us grow in a more sustainable way and in a way that's not going to put our business or our personal lives on the edge, right? So it's not the problem either. Did you want to say
Yeah.
something about that?
Oh, if anything, I feel like sometimes having uh, owners pay and being paid, sometimes you can feel a bit weird about, hey, I'm getting paid for what I like to do anyway. And I think that that is a good thing to do, to pay
Yeah.
us a fair wage. And
Yeah.
Mike, again,
Not
is
just
all about,
fair, but a good
yeah,
wage.
yeah, he's about ending entrepreneurial poverty. And it starts with paying yourself first, and not just a little bit or small percentage, but pay yourself first. What you want to get to, that what they say TAPS, target allocation percentage, of 50%, right, of your business. And so that, again, not the problem. I think it is sometimes a problem for some people, but the main thing is, hey, once you get into the mindset of, hey, I got my bank accounts, I am paying myself, because if, like us, we have high months and low months, we want to have a good, stable um, income no
Yeah.
matter what happens.
Yeah.
But
Yeah.
then we go into our next thing.
Yeah. So here's the big problem. If you've been following Profit First for a while, you're going to have experienced this problem. Anyone that's truly following the system and is creating a truly profitable business that is serving their customers, doing a really great value added job is going to end up with a bunch of cash just sitting in those bank accounts.
Which is a good problem to have, by
It's a
the way.
really good problem to have, but sometimes people will have hundreds of thousands of dollars just sitting there earning piddly interest, not growing hardly at all, if anything.
Yeah.
And we should say it's not really just sitting there. The bank does not just have those hundreds of thousands of dollars or however much just sitting in the bank. The bank gets probably lent it out to someone else, maybe another business owner that's not doing Profit First and going into debt, right?
Yep.
And they're making lots of money on your money by charging that business owner interest. And you just leaving it there in the bank, you're not going to get as much, right? They might be charging the other business owner 5, 10, who knows what percent, and
Yep.
you're getting maybe 1%, but likely a lot less. And that's a problem, especially when you factor in the time value of money and inflation. You're actually losing money by having money sit there in the bank. Like, I don't want to lose money. Do you want to lose money?
No, I actually want my money to be doing double work, or leveraging it to where it's actually working harder for me. And
Mm-hmm.
so that's been my biggest challenge, is saying, okay, it's just sitting there. What couldn't I do something with it? And that's probably what happens with a lot of business owners. They're like, yeah, but I could use my money. I could use it for this or use it for that. And that gets a bit challenging.
Yeah. And we know it's important to keep some liquid cash available in case it is needed for the business, particularly in the case of maybe you do business and you get paid after the work is done, so you're upfronting the cost, things like that. But like if you're getting to hundreds of thousands of dollars, right, or even $50,000, depending, it's all relative or whatever, just sitting there in the bank, like what's the solution to seeing that money grow, at least keep pace with inflation so you're not losing money when you consider the time value of money, right?
Yeah.
So what's the solution? Now, we're going to share some ideas of what other people think about and talk about some of why we did not choose those ideas. And then we'll share with you how we like the idea that we ended up going with and how it's working out for us. Does that sound good?
Sounds great.
Okay, and we'll pause here for a second. Don't forget to leave a comment, share with us your idea of what you would think of would be, what do you do with all this money just sitting there in the bank when you want to keep it liquid and accessible for you, for your business in case your business needs it, maybe for an opportunity, for an emergency, to pay taxes, whatever it might be. So if you have an idea, please leave a comment. Let us know what your idea is. But let's share a few. Put it in the stock market. Wait,
yeah,
sorry.
I was going to say the one thing to think about when it comes to Profit First or any of these systems is it's meant to help you do what you do best as a business owner.
Yeah.
And some of these things you adapt and mold to what best serves you. But you don't want to just adapt and mold it so much that you're like, oh, I don't need to get paid. Oh, I don't need to save for taxes or whatever. The system in itself and its essence is meant to give you some guidelines. But then how you use those guidelines is as creative as people.
Yeah. And that's also why you work with a profit first professional who knows more so the ways to bend the rules or stick to the rules, right, that are outlined in the Profit First book, because there's a whole community of people that are playing around with the Profit First concept and the system, and they're working with hundreds of clients and seeing each one implement it in the way that works for their business, and able to even talk to the author himself to say, well, what would you do in this situation? Those kind of things. Yep. So here's some ideas of what you could do to make sure that you your money is growing. The first one, maybe the stock market, but honestly, that's just too risky.
That's once you have it in an account, and then you're just putting it somewhere else for a time, right?
Yeah. So all this money's piling up in the bank account. You could just take it out and buy stock. Hey, Brian, you're getting ahead of us. We're going to get to that for sure. And the stock market, yeah, absolutely too risky. You could buy a whole bunch of stocks and the next day they could be halved. And if you need the money the next day because all of a sudden, X, Y, or Z is there, you're not going to have it. Plus, if you are going to be buying and selling stocks on a regular basis, maybe under a year, right? Because you're going to need it for your business, any growth that you get is going to be taxed, and that tax is going to cut into your gains that you got. It's going to make them much smaller. So if you got a 10% growth on your funds, but you have to pay Uncle Sam 20% of that, now all of a sudden you only have an 8% growth, and your taxes could be way higher depending on your tax bracket and all of that. Yeah. So something to keep in mind with the stock market, it's not just about the gains. You have to think about the tax implications too. Next, we have another idea. Maybe just use some money market accounts or CDs. Those could be an option. If you've looked recently at the interest rate that you get on a money market account or CD, it's pretty small too. So I don't know how great it would be at helping your money keep up with inflation. Maybe it'd beat the savings account at your local bank or credit union, but it's not necessarily going to be that great. Plus, let's say you bought a 90-day CD, when that term is over at the end of the 90 days, you're going to have no clue what the next rate of return is going to be, right?
Yeah.
What kind of interest they're going to give you the next time you buy the next CD for 90 days. And it can be pretty fun to ladder CDs and do different things, right? You buy one that's a year, one that's 6 months, one that's 90 days. So you always have like cash available at certain increments. But that can also be like super time consuming to manage all of that. And you're always worried, are there, what kind of interest rate am I going to get the next time one of those matures and I go to the next one? Plus, guess what? It's taxable. Any growth that you do get, you have to pay taxes on.
And you're also still needing to run your business.
Right.
So
yeah.
There's that. So
yeah. So that's part of why we didn't choose that one. I can understand. We're not like judge anybody for choosing these. We're just sharing a little bit of what the options are, why we didn't think they're a good fit for us. And then a third idea that we did not choose and was cryptocurrency or Bitcoin. And that could have been because when we first started following Profit First, those weren't very popular options that people were looking into. It was very, small thing there. But there's some risk to it, losing your password being one of those risks. And there's a lot to learn to know that you're making the right decisions, right? And it's still a continually evolving industry, I guess you'd call it. And so who knows where it's going to be when you need the money, right? I know there could be people that heavily disagree with me on that, but, and like they're really into cryptocurrency and Bitcoin, and are like laughing at me for not doing that, but I'm okay with that. That's not my.
It depends on if it's your business model too. If you know what you're doing and all of that, maybe that's okay if you know what you're doing. But most of the time, again, it's like the other thing. We are really good at our business. We're really good subject matter experts in that we want to have a place that is, a little better than a savings account. At least, hopefully.
Yeah. So let me take you back to what we ended up doing. And we'll share Brian's comment here. He said, start a bank on yourself policy. It's a great place to park cash that's easily accessible and can be used for capital expenses or to pay taxes. And that is what we decided to do. If you're not familiar with Bank on Yourself, we've got a whole playlist on our YouTube channel with lots of Bank on Yourself FAQs, where we do some deep dives into what it looks like. But in short, it is a high cash value, dividend paying whole life insurance policy. And I know a bunch of people just dropped off. No, just kidding. But if you have an open mind, it can be something to learn about and explore. And what we knew, we had already been using Bank on Yourself before we came to Profit First, just as a full disclosure. We had personal policies that we put our personal money into from what the business paid us. And that was part of how we were able to even think about, like, part of why we were able to do Bank on Yourself personally is because we had put paying ourselves first and making sure we're even able to save for our own retirement, ahead of, all the OPEX and different, things like that. And that was kind of our big push to be, profitable and have a truly profitable business, was because we wanted to fund our Bank on Yourself policies that we had started personally.
Yeah, exactly.
And those are really just our retirement savings. But what we liked about those policies is that the money could still be accessible if we wanted to use it to reinvest back into our business, to open a second location, or if we just needed it for emergency purposes or what have you.
Or have a line of credit.
Right.
It's kind of what we did at one point. Like, we had access to that at a lower rate.
Yeah. So we were using Bank on Yourself just personally. And then we started using Profit First, and we made a much more profitable business. We actually, in the meantime, we had switched industries. We used to own a coffee shop, and now we're in the financial services, as you know. And really great. But even when we first started as Bank on Yourself professionals, we hadn't fully implemented Profit First. And then we were just, we'll pay ourselves first, and then we'll run the business with whatever's left. Then Brandon bought me the book, and we started implementing. And at first, we just moved the money, we let it build up for a while. We followed the allocation percentages, we got to our targets, we just moved the money. We didn't put in anything into a policy. And remember, we started January 1st, right? Because Brandon had bought the book for me for Christmas. And that whole year, we just let the bank accounts build up. And then this is just telling you our story. In December, we looked at how much was in our tax account. We'd been putting 15% there of all the revenue we'd gotten that year into our tax account. And then we talked to our tax professional and kind of did a tax review to think about how much taxes are we going to need to pay next year, March 15th and April 15th. And that both state and federal, like the whole tax planning thing. We love our tax professional. He's amazing. He does those kind of appointments with people typically in the fall anyway. So we had a really good idea how much we're going to have to pay in taxes. And one thing I love about Profit First is that when you're setting aside 15% to pay on your taxes from all the revenue that you get, you almost always have extra than what you're actually going to need to pay in taxes. This is kind of how it's set up. And so we took the amount that we had there. We took how much we were going to actually need to pay in taxes. And we put the full amount from that bank account into a whole life insurance policy, a Bank on Yourself designed, proper one. And because we're Bank on Yourself professionals, we've been trained, we know what we're doing. We were able to design the policy so that 4 months later, when we were going to need to actually pay those taxes, we knew that we'd have enough available to take a policy loan to actually pay those taxes for us. And we were able to design it so that each year, the amount of funding that we do is flexible, because we don't really, when you're working with percentages like 15%, it's really important to have flexibility, right? Yep. Some years might be higher and other years lower. We wanted to be able to have that kind of flexibility. It's not a set premium the whole time. So what ended up happening is that, we had enough revenue come in those first few months of the year, and putting that 15% aside in our taxes, that we actually still had enough in our tax bank account to pay our taxes rather than having to take a policy loan. It was really cool how that ended up working. And then what we did for the rest of the year is we would put 15% every time we got a deposit. We'd put that 15% right into the tax bank account. At the end of the quarter, we'd pay our quarterly estimate of our taxes. And then anything that was left in that tax bank account, we would put into our policy as kind of saving in case we need to pay extra on taxes. But because we had that first year premium just sitting there, we knew, we felt confident it's going to be a piece of cake to pay our taxes if any are due next year, right? Because the cash, there's enough cash value already to pay 1 year of taxes that would have been due, right? And so anything more that we add is just going to keep more and more growing, which our business did grow, right? So we ended up having to pay more in taxes, but because we'd put more in there, we were able to do that. And it's just been a really amazing thing to see happen. In addition to adding our tax money there, we also, with the profit account, you take half of the profit per quarter and it goes to you personally. You do something fun with it. That's been a really big challenge for us, is actually during COVID, especially to think of fun things to do with our profit. Exactly. But the other 50% of your profit kind of sits there and starts building up a vault. And that's also where people tend to get a big pile of cash. We actually started moving some of that profit account into our policy as well to create a vault so we can use it for the next expansion of our business or something like that. And it's been really cool to see that policy growing. And we've had some really fun opportunities for what we've been able to use it for. Brandon, do you want to talk about one of those that we were able to do?
Yeah. So here's another thing that I think is really important when you have a handle of your money, on your money. So every year around December, this happens. Everyone's trying to get a big close out their year solid. And so I don't know how many I got screw the tax man emails saying, hey, if you pay for our service up front, we'll give you this amount free. 2 months free, whatever. So
Or
our
a
podcast
10%
producer,
discount or
yeah,
whatever.
all
Yep.
of that. So our podcast producer said, hey, if you pay all this up front, I'll give you 2 months free. Well, we don't have it in just sitting in the bank account in cash.
In the
Um,
operating expense bank
yeah,
account, right? Which is where we were paying him monthly from.
yeah.
Yep.
We had it in the tax account. So we
In the
pulled,
the
or in the vault.
policy.
Yeah,
In the
yeah, the
policy.
policy. So we pulled from that, and
We
then
took a
we
policy loan.
saved. What was our ROI on that when we ended up like 17% or something?
Yeah, 17 because we got 2 months free, which was a 17% discount.
Yeah. And because we had that available using Profit First, and also it was doing something else within the policy, we then took that money and paid him from that. And then we just pay us back as if we still have that out.
Yeah. Yeah. So we put this tax money in there, some profit money in there. Then we were able to use it to pay up front for an operating expense. And then now each month, the operating expense budget or bank account is paying back the policy, what would have gone to our producer.
Yep.
You know, what on that monthly basis. And so we got that 17% discount, which is like a 17% return on our investment, kind of. And we're paying ourselves back. But in the meantime, that full amount is still growing as if we never touched it. The same with the money we have had to take out to pay taxes. It's still growing as if we've never touched it. That's the beauty of the Bank on Yourself system, is that they work with all companies that when you take a policy loan, they still give you the same growth, the same dividends as if you didn't take a policy loan. And it's a beautiful thing. Now, a lot of people won't explore the possibility of using a Bank on Yourself properly designed whole life insurance policy because there is a loss of liquidity. There is a cost of insurance. When you pay that first premium, you don't have the exact amount that you paid available right away.
Yeah, that was what somebody said in the comments when they were asking this in the Facebook group of what's the cost.
Yeah.
And
yeah,
of course,
but
that's always a question.
Yeah. But remember, we worked with our tax professional. We made sure that was not going to be a problem for us. And it was the kind of the beautiful thing with that 15% tax account. But it was also, even with that temporary loss, it's made up over time. And our money grows for us for the rest of our life, no matter how often we need to take it out to pay taxes or to invest in our business, right, to help it grow, or to save 17% on a major purchase that we do. It's still growing for us for the rest of our life, and there's guarantees behind it, plus dividends, that have been paid for over 100 years by the company that we worked with. All of those things. Now, sorry, go ahead.
I was going to say another positive is it is life insurance. So if something happens, let's say you have loans outstanding, something happens to me because it's on my life, then Amanda will be okay because she won't even have to worry about the business because the policy is going to pay her close to $1 million or two, I think, of a death benefit, right? That she'll be able to, do whatever she wants with them, profit first in the business. But I think that's another asset. Like when we have business expenses, we make sure we cover the lights. We make sure we cover all of this other stuff. But oftentimes we don't cover ourselves, right? And we are a big liability to our business. If we are out of work or something, we can't make that money. So having that expensive insurance can sometimes be really a great peace of mind.
Yeah. And I can use that for, again, like whatever I would need to. Hopefully, it doesn't come down to that, right? Brandon lives a long, full life. We'll get back into that. I do want to say, like, we've been talking a lot about ourselves. Your situation might be different. You might have a big OPEX account instead of a big tax account, right? You might be running such a lean business that your operating expenses are pretty small. Highly unlikely, but that could be you. You might still be working toward your target allocation percentages. You might just be putting 1% to taxes right now, and slowly moving that up to the 15%. Each business is different. And that's why you need to work with a profit first professional to actually help you fully implement profit first so that you get cash that's just sitting in there in the bank and you deal with this big problem of profit first, right? If you're like, well, I don't have the cash just sitting there in the bank, then check out Profit First Professionals, get you one, and get the cash building up in the bank. And then once
then you might see that the reason you don't have a lot of money in the account is because you haven't done an expense challenge and figured out that, hey, there's some things that I'm spending money on that I shouldn't be.
Right. Or that you don't need to be, or, whatever. There's no, shouldn't is a hard word. But then once you've piled up that money, that you have that money that isn't totally needed today, right? Or, that kind of thing. Once you've kind of found the money, then we highly suggest working with a bank on yourself professional to decide if a policy is right for you, which one to work with, make sure you get all the advantages like the flexible funding, the ability to take policy loans and still get the same dividends, all those kind of things that we've been talking about. And let's recap again. So we've talked a lot about advantages here. Brandon mentioned the death benefit advantage, right? It protects your family. If it would help with business continuation, if something happens, right, to you, it allows your family the ability to shut down the business, right? Like, and pay the expenses that would be involved with that, or, continue the business depending on your situation. There's also accelerated death benefit protection, where if you get a chronic or terminal illness, you can advance the death benefit to help cover some of the medical costs associated with it. Those are really great, but those might feel like, it's not that important. I just need to run my business or make this money grow. One of the things I love a lot about cash value within a whole life insurance policy is that it grows tax-free. You don't have to pay taxes on it each year. So that can save you on taxes. And then you can also use it later tax-free. It kind of works like a Roth account. There's certain ways under current law. So the eventual plan with this policy, once we're done using it for business and we decided, okay, now it's time to retire and live on passive income. Maybe that never happens. Maybe we decide one day, or maybe we're forced to retire due to health concerns or something. We can take that cash value and it becomes our retirement account. We can use it as income. And so at the same time that the business is being smart, setting aside money for taxes, seeing that that money grow better than in a savings account, the growth and the dividends that are coming in can become a retirement asset for us personally. And we can know today with a pretty high degree of certainty how much we'll have in retirement when it comes to that time. The huge advantage there. So many business owners think, well, I'll just sell my business and that will help me fund my retirement. That might not be the case. There's so many business owners, of the baby boomer generation that because of some of the changes that have happened in the economy
or technology.
And technology and stuff. Yeah, they're not able to sell those businesses. And then there's also some really fun ways, depending on your situation. Some people say, well, my health is bad, I couldn't qualify for life insurance. We'd say, don't rule yourself out. You never know. Plus, you can have other people that you can insure. You don't have to insure yourself. You can be the owner still and control the cash. And you can even use the policy. It can be a business held asset, depending on what kind of business you have, depending on your
Yeah.
structure. Way too much details here for us to get into and actually keep you entertained on a live YouTube video. But a couple examples is that you can actually, like, if you're going to give bonuses to your key employees, you can have those bonuses go into Bank on Yourself designed whole life insurance policies, and they can vest over time, which helps you improve retention for those key employees. And it becomes some of those key employees' retirement plans later. You can use whole life insurance to fund buy sell agreements with your business partners. So now all of a sudden it allows, if something happens to your business partner, you to buy out their family. So you're not stuck working with someone that you don't want to work with, right? The estranged ex-wife, or, whatever it might be. So there's some cool business uses here too. And within the Bank on Yourself professionals group, there are some of us that specifically focus on serving business owners. And we know a lot about these business uses of Bank on Yourself designed whole life policies. Brandon, what did I forget?
Well, I want, I guess, the audience to realize that our wallets are, it's all one wallet, right? But we want to separate things, and realizing that you are your greatest asset in your business or your business partners. And how best do you do that in a way that isn't just a liability that you're paying for, that'll eventually be an asset, right? But how can you use both the Profit First system, Bank on Yourself system, to help you if things change, right? I have a business owner that the business owner's partner died, right? And now it was really sudden and fast, right? Now they're like, oh, how do I wish I would have done a policy. Wish I would have done something. And that's the hard part of, I wish I would have, everyone thinks they're going to be, it's not going to happen to them. Yeah. Right. And I think that's the hard part. Do you have the breakdown of how we did it, like a physical?
Oh, kind of. So I was looking at this before. Let me share. So we did, actually, we should probably post this in the comments or to the description. We did a whole webinar with our awesome friends at the Not Your Average Financial podcast right here, all about combining Profit First and Bank on Yourself. And this is an image we put together for that, right? You have all your money, coming in from your clients and customers, going into your revenue bank account. And then from there, you distribute it to your profit, your owner's comp, your taxes, and your operating expenses, and in that order. And then on a regular basis, you pay yourself income. You also take half of your profit. When you actually pay your taxes, that's going to the Internal Revenue Service, but it's counted kind of as income for you. Maybe that should be like a dotted line. But what we did was take the taxes, and that goes into a policy. But then also personally, like I talked about, we are putting our own savings for our own future into policies. And just like you can have multiple bank accounts here, you can also have multiple policies to for the different areas of your life. I'm actually glad that this isn't one big bucket where we put all of our money, but that we have the personal ones and the one that's more for business, right? It's not really a business policy. It's personally owned by us, but that's what we think about. This is money we want to use for personal uses. And then, of course, when an opportunity comes up or there's some kind of special growth you want to do, you can have access to it. You can also, take money out to pay the Internal Revenue Service. This is kind of a rudimentary diagram. We all know money moves around in a much more complicated than this, but it's kind of just an idea to give you a visual for our visual learners out there, what it is that we're talking about.
Well, and I think that money is moving in so many different ways, and that's why Profit First method is really helpful, because if it's so such a big plate and it's moving everywhere. If we have a smaller plate, it helps us to have better goals, maybe helps us to not screw up our goals. All kinds of things that I think is powerful. And I think that, again, having a direction of where we want our money to go, if we can point it in that direction, it's going to be a lot easier. Kind of like the flow of water, right? If we kind of know where it's going, we built a path, it's going to go in that direction a lot easier because we've already built that river or whatever.
Yeah. Yeah. So for more research, if this is piquing your interest, we have on our YouTube channel a playlist that's about Profit First. If you're new to the Profit First method, then we also have a playlist on the YouTube about Bank on Yourself and frequently asked questions that we invite you to check out. Or even better, if you want to talk with us, ask us questions personalized to you, we would love to talk with you as well. I'm going to put this link up on the screen here, grandmaswealthwisdom.com/intro. You can go to that link, schedule just a 15-minute call with either Brandon or me. And the purpose of that intro call is just to answer your questions, whether they're about Profit First or about Bank on Yourself, and see if we should take any next steps together, whether they be related to Profit First or Bank on Yourself or something totally different. We love having conversations with people, and we would love to talk to you. So again,
if anybody's here live, write a comment, ask a question if you have one. I see a couple of people here. Thanks for watching live. If you catch us on the replay, write a comment or question in there, and we read every one of the comments there.
Yeah. And don't forget to like the video, subscribe to the channel, hit the bell so you get notifications. We're going live most Fridays. Short programming note, we will not be going live next Friday because we are going to be celebrating our son's birthday. He turns 3 next Friday.
Wow, 3.
It's been a long time already, but too short. Cool.
Don't tell him he's too short.
No. grandmaswealthwisdom.com/intro. That's how you get in touch with us. If you have questions or concerns, maybe you want to tell us we're totally wrong. Hopefully not. If you want to introduce us to another way of handling all that cash that piles up in the bank accounts that you set up for Profit First, we'd love to hear what you're doing. Maybe that'll help us serve our clients better too.
Yeah. The key is to build up cash in your accounts and, again, pay yourself. I think as you do that, it's going to help you have a healthy business. And that's really what we're about here.
Yeah. Yeah. And for those of you that are readers out there, of course, the Profit First book is really great. For business owners in particular, I would recommend going back to the original Nelson Nash book called Becoming Your Own Banker. So he's got a lot of business examples of how when you're thinking like a business owner, that's exactly how you think when you're using a policy, a Bank on Yourself type policy. And it's actually what we found is that business owners get this concept of becoming your own bank. Thinking like a banker, because banks are businesses, right? And if you're going to bank on yourself, you're going to be treating your personal finances like business finances. And so business owners often get this concept a lot faster.
Well, they also see oftentimes business owners, and I saw this whenever I would run a transaction, 2% already off the top always goes to
2.75, I think it was. Yeah.
And I'm like, really? 2.75 gone to this guy that never shows up to work, and just because he has a machine here.
Right.
And then on top of that, you had the tax guy that's never there either. And that was a little annoying. So
yeah. And the licenses and all the state registrations, all the things. Yep.
That's just for a coffee shop. Oh my gosh.
Yeah. Well,
Uh,
any business has something like that for sure.
yeah. So thinking again where those go, money is going out, and again thinking like a bank. Most of the people we work with, this is something I've learned a lot, is a third of their life is spent working for a bank for free. You don't want that to be your business, where a third of your life is helping J.P. Morgan, Chase, whoever, uh, get rich. You want your business to be profitable and sustainable.
Yeah, that's interesting, Brandon. So most people, the typical American, a third of their life is working for the bank because of the amount of interest that they have to pay and, servicing their debt, the mortgage payment, the credit cards, the car
Mhm.
loans, right? That's all their workday that's going to the bank. It's interesting to think that if you're following profit first and as a business owner, you're piling up money in the bank that the bank then is going to put to use and they're making money off of your money.
Yeah.
It's
Isn't
like
that,
you're working for the bank, right?
yeah. To
Um,
help them. I don't know. It's weird.
right. Whereas if you take back the banking function of your life and you're banking on yourself, you can make that growth.
Exactly.
Um, and then you can have your business growing for you, and you can have your policies growing for you, and you have two assets um, that mutually support one another and mutually support you because they exist for you
Yep.
rather than allowing other people to get rich off of your labor.
Yep. So with
Yeah.
all of that, I just want you guys to just, as you're listening to this, um, take this information in and take ownership, right, in your business. If you don't know about Profit First, then read it. Read the book, right? And if banking yourself is
Oh,
like,
can I
oh,
just recommend the
oh, hey,
audio
Will,
version of Profit First too? The
yeah,
paper one, really great, but Mike reads his own books. So if you're
yep,
ever listening to a Mike Michalowicz book, it's so much fun to listen to the audio version too. And hi, Lil, nice to see you here. We will pass
terrific,
along
dude.
your happy birthday
Yeah.
to the little guy.
Yeah. So I was just saying, uh, be learning, right? Never be in a place where you're saying you already got it figured out or whatever. So if banking yourself is something you're like, oh, this is a strange concept, research it, see
Ooh,
how it can maybe work.
don't believe everything you hear on the internet or read on the internet.
Same
Look for
with Profit
some,
First, too.
yeah.
Don't, I mean,
Yeah,
there is a Dave Ramsey hates on Profit First in one of his videos. Yet they presented at one of his conferences.
right, right. So, yeah, really do a deep dive, and we can't recommend enough. Work with a professional who is going to help you learn more and is there for your best interest, not just about making money for themselves, and is only going to suggest a bank in yourself policy or something else if it's a true benefit for you.
Yep.
Okay, we'll catch you next time, probably in 2 weeks. Have a great one, and hopefully, we get some good weather coming up, or wherever you are, you've got some good weather to enjoy.
And again, share the video. And we want to see you guys break through to a smart, stable financial future, not just in your personal life, but in your business life as well.